Now, you may call me a modern day Nostradamus, but I think you're going to want to know what Bitcoin is, certainly over the coming years, whether it's to invest or whether it's just to talk about at dinner parties. So I'm going to give you a quick overview today. So one thing that's important to point out straight away is that you have over 10,000 cryptocurrencies in the world. There's Bitcoin, which is the main one. It was the original one. And there's everything else, which is altcoins. So Bitcoin is a digital currency. It's a store of value, whereas the altcoins do other functions such as decentralized finance or trading things like NFTs, for example. Today we're going to talk about Bitcoin. Now, this is a really good book. I have a couple of friends of mine who have actually read this and got completely sold on the idea of Bitcoin and blockchain, so I really recommend it. But first of all, thinking of Bitcoin as a digital currency. So for something to be a currency, it needs to have a medium of exchange. Two, there needs to be a unit of amount. The world used to trade in commodities. People used to swap salt, wheat. They used to pass metals. Gold was a very popular medium of exchange. From the 19th century onwards, governments started to issue paper money, but it was backed by gold. So, for example, they might have issued 1,000 notes, and that might have been backed by one piece of gold. So the value of it always equaled 1,000th of a piece of gold. After World War I, governments actually moved away from this. It was called the gold standard. They moved to something called fiat currency, which is not backed by anything. So essentially, governments today can print money in something called quantitative easing, but this is risky because if they print more money, if they need more money, and it's not backed by anything, it can lead to something called hyperinflation. And actually 47 hyperinflations have happened in the era of fiat money, whereas there was only one event globally of hyperinflation before this. So some may argue in this era of fiat money that money's actually broken and there needs to be a new way of paying and exchanging, and this is where Bitcoin comes along. Bitcoin was the brainchild of a pseudonymous coder called Satoshi Nakamoto back in 2008, just after the financial crisis. He posted a white paper online which outlined what Bitcoin and cryptocurrency and blockchain was going to be. And so what's the difference between normal currencies and Bitcoin? Well, with normal currencies, they're controlled by central banks and central governments, and central banks can choose to print more money or increase the money supply, which actually brings the real value of that money down over time. Whereas Bitcoin, it is completely globalized. It's not owned by any government. It's not owned by any central bank or central body. It's owned by all of us. And that also means that the supply of Bitcoin will always be and remain at 21 million Bitcoins. That's fixed into the code. And so they can never print Bitcoins to inflate the price ever. Another key thing is every time there's a transaction, for example, if I was going to send you some Bitcoin with traditional money, either the credit card company or the bank is the one who's responsible for holding that central ledger with the information about all the transactions. Whereas with Bitcoin, there's something called nodes or computers. And each one of the nodes will hold a copy of that transaction data. So if I was to send you Bitcoin, that transaction would be recorded on nodes all around the world on hundreds of thousands of computers, again, making it decentralized. That's important because for this code to be hacked and changed, the hacker would have to change the code on 51% of all of those nodes or computers, which is very unlikely to happen, which is why today, or the blockchain for Bitcoin has never been hacked. Another key thing, it's a lot cheaper to have a transaction in Bitcoin than it is with traditional finance. If I'm to buy something with my credit card, that will be expensive for the vendor selling me something because they have to go through all the different MasterCard or credit card fees, whereas with Bitcoin it's a lot cheaper, so it's attractive for businesses as well. When I make that transaction in Bitcoin, there's a very small fee which is charged, so that fee goes to the Bitcoin miners. So what the miners do, again, they have these complex set of computers that do complex mathematical algorithms and calculations, and they race to do these calculations. The miner who gets there first validates that transaction, and so they get rewarded this small amount of fees. Importantly, and I've spoke about this in my other videos, is the reward that's given to miners actually gets halved every 4 years, and the price actually spikes around this event. So the next halving event happens in 2024, which we're really excited about. So what gives Bitcoin value? It's the fact it's decentralized, it can't be corrupted by central governments, the supply is always fixed, and so it's attractive for countries with unstable currencies, such as developing countries. I hold my cryptocurrency on a decentralized wallet, and I can trust the system. The popularity in Bitcoin and blockchain has exploded over the last 10 years. It was very popular with criminals early on simply because of these cross-border transactions that were hard to trace, but now it's more popular in the mainstream. Back in 2010, you could buy one Bitcoin for 40 pence. Now it's worth $17,000, and it went up to a maximum of $69,000. So the return over the last 10 years has been over 10,000% in performance returns, which you cannot find in any other asset. And if you are to listen to any of the experts who are smarter than me, they believe that Bitcoin could go up to anywhere from $500,000 to $1 million per coin by 2030. So if you can do the maths on what percentage return that would be, it would be incredibly impressive. How do you buy it? You can go onto any of the centralized, very big centralized exchanges and buy it there. But what's important is that once you have bought Bitcoin, that you move onto a decentralized wallet, either a hard wallet or a soft wallet, which I can cover in later videos. I'm certainly excited about Bitcoin and cryptocurrency in general, and I hope I've given you enough to make you interested to learn a little bit more in future. Thanks.